for those doing the numbers, I did join as a grad, so I'm not that old. I'm just going to talk a little bit around how we view sort of wealth management today. I'm going to talk a little bit around the UK and our experiences in the UK, primarily talking about that as an asset manager and how we see working with our partners in wealth management, in banks and insurance companies. I'm sure doing many of the same things or similar things to you in the audience. I'll briefly touch on the fact within the UK itself, we have our own fairly substantial wealth management business, so we also have the experience ourselves direct to clients. I'll touch a little bit around how some of those trends we see playing out internationally. And then finally, as an asset manager, what are the kind of things that we have seen and how we have tried to work with some of our wealth partners to help them and help their clients in what they're doing. Maybe just a slide to kick off with, which shows the sort of overall universe of global client assets and the fact that 2/3 of those assets are invested by individuals. A significant part of that of individuals that are advised, but people do talk a lot about pension schemes, insurance companies, their balance sheets, etc. But the reality is a lot of assets are directly owned by individuals. And when you look at the growth and how those segments increase over time, more and more of the wealth segment is where you see growth, whether you're looking in the UK, whether you're looking in continental Europe, or whether you look further afield to Asia and elsewhere. As many of you might know, the UK is slightly different to some of the countries across continental Europe in that it is not really a bank or insurance intermediated market. I'll come on to talk about the background of the UK and how the UK's changed. But the reality is banks play a very small part in providing advice, wealth management for individuals. Insurance companies, very little at all, although some of what's happening in the future wealth management is in part being driven by insurers. But a lot has come from originally financial advisors and a lot of fairly small and then fairly large financial advisors across the country. And then obviously in the last 10, 15 years, we've seen more larger wealth managers and more consolidation of IFAs into bigger, but less numbered, if you like, intermediaries into the market. Some of those same trends are playing out in Europe, and I'll touch on that. But Europe tends to be 50%, 60, 70% bank and insurance advised business. So what has happened in the UK? So I think the UK has been a sequence of regulation that has then impacted business models across the whole of the industry, asset management, IFA's advice, and the growth of wealth. It started with the Retail Distribution Review, which was about 15 years ago now, where effectively the main part of that, and the part of it everyone knows or remembers, is that the regulator, the FCA in the UK, effectively banned retrocession. So until that point, for an asset manager such as M&G, we would obviously spend a lot of time with IFAs, helping them build portfolios, helping them in terms of our products, how they could fit in those portfolios, and ultimately the retrocession, providing a lot of the funding, and in many ways the advice part of it and the agreement between the IFA and the client, not being, if you like, the major sort of contractual or the major fee part of the chain. The immediate aftermath of RDR was quite pronounced. So many IFAs, the challenge for them was effectively how do they generate revenue, and that became much more contractual with the client and the advice. And it also became the case that there was a lot more regulatory scrutiny on an expectation on IFAs about how they were building portfolios. So in the UK, that led to the rise more and more of multi-asset and funder funds, and a number of houses were very prominent in being able to offer IFAs funds that had a mixture of asset allocation and being able to do manager selection, as IFAs had less and less time to do it. But also what it saw was, and maybe the most prominent example, has been the rise of St James Place and wealth managers that much more started to integrate advice, product, and for some, the platform themselves. And so effectively their offering to the client became holistic in how they're operating. And that really set off a whole thing around what's the sort of value chain for the IFAs, for the wealth managers, and led to the growth of what has been the biggest trend in the last 5 years of model portfolios, discretionary fund management services. So it started to move away from products from asset managers or purely a product from asset manager directly to a client, and more about a portfolio or a portfolio service that would be made up of primarily still funds in the UK. They would tend to be maybe risk rated by external parties to help in terms of marrying expectations on outcomes to inputs. And that has led to this prominent rise, but still different players. So you've got some trying to provide central services that IFAs can come and use, platforms or portfolios. You've got some that are consolidating IFA groups. And you've got obviously some of the wealth managers that have continued to grow and effectively continued to acquire advisors by effectively buying advisors in their books and then offering them the ability to retire and recycle those books to new advisors, which has very much driven SGP and the likes of Quilter. So the market has become a sort of very different one in terms of who the sort of players are. Wealth has been a big growth, but the IFA market still exists, but they've tended to consolidate and they've tended to come in and use central services. I would say the other thing that we've seen is as those portfolios have grown, so the amount of money, and this gives a good indication, if you look at just the retail part of the UK market, it's 1.3 trillion. If you start to add in high net worth, et cetera, it gets much bigger. But more and more of that 1.3 trillion has come through advice, and it started to go through platforms, open platforms, not so much the old life and pension platforms. And the model portfolios, discretionary fund management services have grown. What that also means is, and what we've seen, is a growth of much more expansive models. So the models that advisors are accessing and DFMs are using, they're much more global. They're more granular in how portfolios are being built. People talk a lot in the UK about the decline of the UK share market. People talk about a lot of private equity money taking money private. It's also true, though, that a lot of clients within the UK have taken money out of the UK market. So although this market has grown very rapidly, 5-6 years ago, if you talk to a DFM, they would have probably 25-30% UK equity. Today, that number's about 7-8%. Talk to a lot of DFMs that have got more money in Japan today than they have in UK equities. So UK clients and intermediaries have actually been a big seller of UK equities. But you can see the dynamics, and in a way, the life and pension bit's shrinking. The direct and banking bit, the direct is not really taking off, banking is shrinking, and it's this middle bit that's growing rapidly. And effectively, then, this is how we've seen it in terms of the progression and how we're seeing moving much more to the right-hand side, particularly from an asset management perspective of how we can work with wealth managers and what we can provide of value in addition or beyond just perhaps the products and funds that we've had for many years and continue to launch. And when we look at this internationally, many of the same themes are played out. So the US is arguably ahead. It's been doing model portfolios for probably, well, ETFs, their model portfolios, 5-10 years, tax reasons, everyone has a brokerage account. It's now moving to much more customized services to fairly retail-based clients. So in the US, it'll be very common for a client account to have some mutual funds, some ETFs, some of that within a model. They'll have then customized baskets of equities and fixed income, and that's even tailored at quite a retail client level. It's also been the biggest allocator of private assets that has started to grow in the wealth segment. UK, as I say, we've kind of described that market. I think in many ways it's following and heading in the direction of the US. The models are becoming very prevalent. It's becoming very open architecture. Everyone puts their models onto open platforms. Some of the original providers of model portfolios have opened up their own architecture. So it's kind of opened up and been very competitive, and the fees for the models themselves are coming down. In the US, the fees are 0. In the UK today, the fees for the models are maybe 10, 15 basis points. They've been coming down a lot. The value chain, the value is very much orientated towards the advice fee. And then Europe, not quite the same dynamics, but is beginning to follow, hasn't had the same regulatory drivers. Asia, very much earlier stage, very much still a fund market at the retail end. As you sort of go up the wealth chain, the clients themselves still want much more autonomy. So yes, model portfolios, other things exist primarily through banks, local banks, global banks, but it's not getting the same traction. And my last slide really is then how do we think about this as an asset manager, and how do we try and help and work with people like yourselves in the room. And obviously this is sort of how we start and how we're known, the products, and you're going to hear from many of our fund managers today about the strategies we run, why we run them, how we differentiate, we believe in what we do. I think you'll know M&G well enough to know, we're a high active share, we're a fundamental analyst, and we absolutely believe in sort of robust and tested investment processes through time. But what we've seen from our clients is they know there's lots of things that we do and provide for ourselves to enable us to do this. Asset allocation, portfolio analytics, market assumptions. There's all sorts of things in terms of how we implement our own trades. And so what we have seen more and more in the UK, in Europe, earlier stages in Asia, is wealth managers that want to, or IFAs that want to work with us in slightly different ways. So that can be building custom propositions. It can be people that want particular building blocks, or they want lower tracking error. In Europe, we still see quite a lot of demand on sustainability and people's sustainability preferences. It can be where we help people in terms of our market assumption and scenarios to help them in building portfolios. It can be in sharing our own strategic asset allocation, tactical asset allocation, and indeed it can be to the point of us sharing research, either at an asset level or in our wider business in terms of how we see the fund universe, third-party funds, and we have tools that we use ourselves that we make available to some of our wealth partners to help them in how they build portfolios, not just in M&G funds, but the role M&G can play alongside other managers in those portfolios. So we see it as very much moving towards solutions, and we see at the wealth end the development to differentiate and to offer clients sort of more and more choice and more customization. And I think just to finish, the trends we sort of see growing some of that, it is access to private assets. If you look at US wealth portfolios, for say a $500,000 to $1 million client, they will have 20 to 30% in private assets. That's not quite true yet in Europe and UK, but that's where a lot of the direction is. That's where a lot of the IFAs managers would like to get their clients through time. And then there are these points around building blocks and whether structures like ETFs, active ETFs, which is talked about a lot, whether they can also help provide easier or better access to the traditional mutual fund. So I'll stop there. It's a bit of a whistle-stop tour through sort of the UK and how the UK's emerged and developed, and what we've seen internationally, and as I say, what we're sort of doing at the asset management end. As I say, we do have our own wealth business, our own model portfolios and platform that we offer, and our own advice within the UK.